So here in this video, we are going to focus on three things. Number one, Tesla stock and what we can expect this week. Well, potentially a bounce looks more likely than not. Yes, the historical data supports Tesla stock's going to bounce this week. Take a look at the RSI. If you don't notice where we are now, well, if that does not make you potentially excited for an upside move, well, then you definitely want to stay tuned for this video. Number two, it's going to be some very critical economic data that I have been talking about for weeks that will be coming out on Thursday that has the potential to be maybe really good news or potentially even a black swan event. That data, if you guys have been watching this channel over the past couple of weeks, well, it comes out on Thursday. So it's going to be a very big deal, as well as a lot of other data that comes out later into this week. And then third, earnings. Tuesday is really your big day of earnings. There's obviously other earnings out there, but Tuesday is going to set the whole mood for the markets and the indexes. If Tuesday is bad, what can you expect for markets? If it's good, what can you expect? We're going to get into all of that here in this video. If this is your first time to the channel and the YouTube almighty algorithm has finally blessed you with coming across this channel, well, consider sticking around a while, especially if you like Tesla stock, especially if you like to make money, and especially if you want to drink Bahama Mamas and margaritas on the beach. One day, reach your financial freedom, your goals, whatever you want to do with your time. You'll have free time to do whatever you want. Hopefully, this channel helps you get there as quickly as possible. At the very least, you'll come away from these videos a smarter, wiser, more profitable investor and trader, and be able to understand markets in a way that maybe you have not before. That's the ultimate aim of this channel. Now, if you guys like some of the trade ideas that we go over, there's going to be a couple here in this video. If you guys want to come learn my trading strategy around earnings to minimize risk and maximize potential profit, link down below in the description of this video. Nonetheless, that's neither here or there. I hope you guys had a great weekend and you are ready to get to work because we're getting started right now. So I want to start here. Barron says Tesla stock had a horrible day. Here's what comes next. And this was actually posted on Friday. If you take a look at what they say, quote, history tells us Tesla may get a mild bounce now. Tesla's stock has fallen more than 5% after earnings 13 times out of the last 41 reports. Shares have gained an average of 0.4% the day after a post-earnings drop and have risen 7 times. A week after the big drop, shares have gained on average 1.4%, essentially picking up another percentage point from the day one rebound. Shares are then flat for the next 3 weeks. So basically, if that didn't make sense, you can expect some form of bounce here in this upcoming week, according to Barron's, according to the historical performance of Tesla following their earnings reports. Now, this earnings report was a little bit different because we've all been so excited about the Cybertruck, about Giga Mexico, and cold water really got thrown on both of those. Cybertruck, again, in the form of an expected margin hit or hit to margins, and free cash flow. We're not expecting the Cybertruck to benefit either of those things. We're actually expecting the Cybertruck to be a drag on margins as well as free cash flow for now the next 12 to 18 months. Nobody on Wall Street expected that. So we did get some pretty bad news on earnings when it comes down to Cybertruck, but also Giga Mexico. Elon showed a lot of restraint around Giga Mexico, and that's where we are supposed to get the next generation vehicle, really the production for that. Elon has said that they want to make that product at Texas, so their engineers, their best engineers, can watch over the product, make sure things go smoothly. But the big production of that vehicle is widely expected to be in Giga Mexico, and we now have no timeline to go off of. So this earnings was a little bit more negative than what we typically expect, although we already knew earnings themselves were not going to be up to Wall Street's expectations. Tesla stock really didn't do much following those numbers. It was all about those comments. Now, I will point you to the charts here. Tesla stock has obviously fallen a lot. You were in kind of this triangular pattern here where you, for a long time, since 2020, since the high in November, you've been following this downtrending line of resistance, finding resistance basically every time you hit this, almost perfectly. And connecting the January 2023 low, you were finding support at this line. You were really at this make or break it kind of moment. If you got a big move higher, Tesla stock would have likely went well into the 300s. Well, you didn't get that. You got the break down lower. Now, I said it was almost a certainty that you hit that 200-day moving average. Like, that was going to happen. And that's what happened. Tesla stock on Friday closed under that 200-day moving average. That 200-day moving average at $214.67. Tesla closed after hours $212.75. So a little over $2 lower than your 200-day moving average. That is not great. But what you can see on the RSI, this is really what I want to show you guys. I talked about this a little bit more in the last video as well, but every time you have gotten to 30 on the RSI, Tesla stock has bounced within 3 days of hitting that level. So sure, the bounce might not happen exactly as expected on Monday, but within the next couple of trading days, you should expect some form of a bounce. Are we going to rip up higher? Probably not. Could we bounce to the 225, 230, 240? It's possible. 230 looks a little bit more likely to me. That would retrace basically the move lower that you did see on Thursday, at least retrace like half of that, which could make some sense as Wall Street digest everything, all the new information on earnings. And let's be honest, Tesla stock is now much cheaper to buy. You're trading at 52 times earnings with a company that's still growing 30+%. As Gary Black said in the last video, it's not a very expensive stock, especially on a PEG ratio basis, price, earnings, growth. You can't really find other stocks that are equivalent to Tesla, that are self-financed, that make billions of dollars of profit every single quarter with like no debt. That's very hard to come by. Now, on the other hand, as we get closer to 2024, you're probably going to get more money flowing into a Tesla because something, strange happens. Some of you guys might not understand this fully. You really have to see it play out to get a better understanding of it. But normally, the markets price in the bad news. So after this earnings, we already know things are not going to be good. There's no false expectations that things are going to be great with the Cybertruck or Giga Mexico is going to be fine. There's really no good things that are expected here. Usually when the markets feel like a stock has kind of hit its bottom as far as bearishness or projected bearishness into the future, investors will say, hey, is it going to get worse from here? And start basing their investments or renewed investments, new investments, based on that theory. Now, 2024, we don't know how many rate cuts we're going to get. Probably 2, maybe 3, 4, 5, just depending on how the economy evolves. Well, we know we're going to get some rate cuts. That should be a positive for Tesla. Markets are forward-looking. They might start to price that in a little bit more. Now, don't be confused. I still think there is more downside to come, especially if the markets do fall. You're just not in the best position right now for Tesla. But as you get lower, especially if you were to get to like a 190 or 180, that's where you really want to reconsider being super bearish. Sure, I do think we could fall another $20, $30 maybe. $20 almost certainly. 190, 180. That's not too unlikely. But once you get down there and everyone is bearish, this is a really good time to be buying. Even at these levels, I mean, it's a no-brainer if you're a long-term investor in Tesla. Now is a great time to start buying more shares if you have been on the sideline the whole time Tesla stock was in the 250s, 260s, 270s, 280s over the past, call it, 6 months or so, 4 months or so. But this week is really going to be dominated by earnings. That's going to be the big story, as well as any developing situation with this Israeli conflict, and it's not looking too great on that front. Earnings so far have actually been pretty good. you've only got 43 companies out of 500 on the S&P 500 basis that have reported. 85% of them have beat, and that average beat is an 8% beat. But your average stock is actually falling after earnings. It's not rising. So we're in an interesting kind of period for the markets. But by and large, earnings are probably not going to be all too terrible. Again, it really depends on a couple different companies, your big tech stocks. But by and large, earnings have actually been better than what we can normally expect on any given earnings season. The lineup for this week, well, Monday, you don't have too much. Some companies, some of you guys might like Berkeley, MedPace, Logitech, Cadence, Cleveland Cliffs. Some of those guys Monday in after hours, but Monday's typically a pretty slow day for earnings. Tuesday, pre-market, Coca-Cola, Verizon, GE, RTX, 3M, ADM, Spotify, NextEra Energy, Centene Corporation, and GM. GM's going to be a very interesting one. I'm excited to see what they have to say about the strike and how that's going to affect their earnings. Now, Tuesday and after hours, that is your big day for earnings. I don't want to say earnings season is over after Tuesday, but Tuesday is going to be your day where if Microsoft does bad, if Google does bad, those stocks fall. None of these other stocks are really going to save the day, right? So if Microsoft and Google have bad earnings on Tuesday, it's probably not going to be a great earnings season. These are usually the ones you want to watch. Now, you obviously have Apple like 2 weeks from this week, so like 3 weeks from now. You have other names, but these two guys are very important. So they report Tuesday and after hours. Snapchat, Visa, Teladoc, Texas Instruments, and that's basically it. Wednesday pre-market, Boeing, Thermo Fisher. I actually am looking on making a trade on this one. Thermo Fisher has like 4 or 5 times the dollar amount trading in their options in the past week compared to a Microsoft or a Google, and they have like a 30% positive order value, whereas Microsoft and Google are actually bullishly being positioned into by hedge funds and institutions by like 70% of a positive order value. So Thermo Fisher is seeing a lot of very bearish option activity and huge dollar amounts. These trades are huge. If you guys would like to come see that trade, come be active in the markets with us this week. Earnings season is by far the funnest season. We have our own specific strategy for earnings season as well that can yield you some very big returns and hopefully minimize a lot of risk. If you guys would like to check it out, link down below in the description of this video. But nonetheless, those two names, T-Mobile, ADP, General Dynamics, and Lithia Driveway will be reporting earnings Wednesday pre-market. Wednesday after hours, Meta, IBM, ServiceNow, Align, KLA, O'Reilly's, and QuantumScape. Thursday is going to be a pretty active day as well. I'm really excited for Tuesday, Thursday, and obviously Thermo Fisher, Meta. Those guys can be important too. But pre-market Thursday, you're going to get Royal Caribbean, UPS, Hershey's, Altria, Southwest, Tractor Supply, and Merck. UPS is a very important one as well. If they have bad earnings, it's usually not a great sign for the broader economy. So you guys definitely want to be watching that one. Thursday in after hours, Amazon. That's obviously another big one. But still, again, it's probably not going to save the day if Amazon has good earnings, right? Just keep that in mind. Enphase reports Thursday and after hours. That one could be brutal. Solar Edge was down 27% on Friday as they had a huge guy down heading into their report, and not this week, but I believe it's next week. Intel, Ford, Chipotle, Dexcom, Skechers, United States Steel, Capital One, and Vail report Thursday and after hours. And then you have ExxonMobil, AbbVie, Chevron, Charter Communications, Phillips 66, a lot of your healthcare as well as your oil companies that typically report on a Friday. So it's going to be a very busy day for markets, especially Tuesday and Thursday, but Tuesday is definitely your big one if you are a trader in the broader markets or an investor in the broader markets, or you're an investor in Tesla. If these guys report bad earnings, again, Microsoft, Google on Tuesday, it's going to sour the mood for the entire index, and what you're going to see is trading algorithms are going to sell off stocks by the truckload. the markets are not exactly down in the gutter. The NASDAQ is still up big from the lows you set last October. There's still a lot of good things baked into stocks right now, especially on your index level. Now, some of your stocks that have gotten beaten down recently might not do too bad. Tesla typically does follow the markets and has like a 2 to 3 beta, so it usually underperforms 2 to 3 times or outperforms 2 to 3 times what the indexes do. So that's why Tuesday could be important for Tesla as well. We'll see though, if you sell off on Monday, some of that bad news might be priced in heading into Tuesday, but it's again way too early to tell that here on a Sunday. The economic data that we get this week will also be important. Now, we don't have much. On Monday, you're going to have Chicago Fed National Activity Index. That's really not going to move the markets. You have some bond auctions. On Tuesday, you have data coming out from Europe, the unemployment rate out of the UK, Germany's consumer confidence, Germany's manufacturing PMI. Germany's the largest country by GDP in Europe, so if they have bad data, that's not going to be great. UK is the second largest country by GDP in Europe. Again, if they have bad data, it's probably not going to be a great thing for our markets, but it probably won't affect it all too much. On Tuesday, you are going to get S&P Global Composite PMI and the Richmond Fed Manufacturing Index. Those can actually move the markets quite a bit if you get a big up or down, movement in those readings, but you can't always count on that happening. New home sales will come out Wednesday at 10 o'clock in the morning, and the Bank of Canada Monetary Policy Report, we'll see what they do if they do raise rates or, even cut rates. That can obviously affect our markets. On Thursday, you are going to get durable goods orders month over month. This one's going to be important. Now, this comes out at 8:30 in the morning. On Thursday, Eastern Standard Time, you're expecting 0.6% month over month. Last month's number was 0.2%. That is a big jump. So it's not like you're expecting bad data. You're going into Thursday, obviously after we're going to be getting earnings on Tuesday, on Wednesday. So there's going to obviously be a sentiment in the markets. Probably not a great sentiment. I'm not super bullish for this upcoming week by any means, but you're already expecting good numbers. So I don't think this is going to positively affect the markets. I don't know how negative it's going to be, but you would have to see a really big number here to get the markets excited about durable goods. And that is important for the reading of the economy for GDP. Now, 8:30 in the morning as well, same time you get durable goods orders, you are going to get the GDP growth rate quarter over quarter, advanced data for Q3. Now, this is important. This is the first GDP kind of print that we're going to get for, this is going to be for Q3. Now, you're expecting 4.1%. This is actually a huge catalyst for the markets this week. A massive catalyst. I talked about this quite a bit before in videos maybe like 2 weeks ago, 3 weeks ago. It's the Atlanta Fed GDP Now tracker. And this is actually based out a little bit. It looks like the Atlanta Fed GDP Now tracker is at like 5.4% for the GDP estimate. And this is going off of the number coming on October 26th, right? That's when it does come out. Your analysts on average are around 3.5%. So 3.5% to 4.1%. That's going to be probably seen as a good number. Might be bad in this market environment where the markets really don't like good news. But if you do get a bad number, for whatever reason, maybe 2%, maybe 1%, that could in and of itself be to some degree a black swan event for the markets. If you're expecting 4%, 3.5%, you come in at 1%, maybe you're a lot closer to a recession than previously thought. Now, economic data has been surprising to the upside, but 4.1%, I mean, how much more is it going to surprise to the upside? That's already to the upside. You would have to see 4.5%. Like, that's probably not going to happen. Okay, so there is pretty big risk there. Now, you're also at the same time going to get initial jobless claims, wholesale inventories, continuing jobless claims, core PCE, GDP sales. You're going to get so much data related to GDP and the economy. It's going to make your head spin going through those reports. If you guys want to go through them with me on Thursday, we'll hit that subscribe button. We will keep you guys up to date with the developing economic story here with the U.S. You're going to get pending home sales month over month, year over year, Kansas Fed Composite Index, 7-year bond auction, 15-year mortgage rate, 30-year mortgage rate, all of that on Thursday. Thursday is a huge day for economic data. So Tuesday's your big day for earnings. Thursday is your big day for economic data, and then obviously you do have Amazon mixed in there as well, but Thursday's going to be crazy. Friday's going to be pretty eventful as well. You have core PCE price index month over month. You're expecting that at 0.3%. Personal income month over month is expected at 0.4%. Personal spending month over month expected at 0.3%, and PCE price index month over month expected at 0.3%. I think inflation is just at this point conquered. I mean, you have pretty high expectations of 0.3%. That's pretty high for your core month over month. Last month's number was 0.1%. So you're expecting a big jump here. I think odds are it probably comes in at 0.2%. I doubt it comes in higher than 0.3%, even around 0.3%. It's not terrible. It's not the greatest number, but markets probably are not that concerned about 0.3%. I think the bigger question is really GDP on Thursday and earnings again on Tuesday. I keep going back to earnings, but if you don't see good earnings, stocks are very vulnerable here, especially considering this conflict over in Israel that's just not getting better. It's actually getting dramatically worse. As far as this Israeli conflict, we're getting this news. It says the elimination of Wissam Muhammad Haider makes 6 Hezbollah fighters that have been eliminated just today. Well, technically, this post is a couple hours old. So on Saturday, during clashes in southern Lebanon, this is easily the most members of Hezbollah that have been eliminated in a single day in years. I expect serious escalations by the group in the next few days. Another one. This just is not getting better, especially on the northern front. Any escalation here is going to be a big problem for the markets. Even consider what happened last week and what you've seen recently. Gold is rocketing higher. Gold is up. Gold does not normally move like this. You have to see a lot of fear out there to see gold go up 9%. At one point was up over 10% in 10 days or so. That's insane. For gold? Are you kidding me? What planet do we live in? That's not great. You have had the dollar trading pretty sideways. At times it's looked at as a safe haven. At other times not. The dollar's kind of revolving around the Fed as well. As the Fed raises rates, the dollar becomes more valuable, right? More people want to own the dollar as less dollars are going to be in circulation, essentially. So the dollar's been kind of doing its own thing, but has been trending higher, and the dollar is going to be a negative for earnings. The dollar started to rise in July and really just full steam ahead in August and September. So FX, if you guys hear that on earnings, that means your foreign currency exchange rates were not favorable for your multinationals. Think of Apple, think of Tesla. That hurt Tesla earnings, the dollar going higher. So on a constant currency basis, you're going to hear that a lot on conference calls as well as earnings numbers. That is just basically what they would have made if the currency was constant at a lower exchange rate fee or whatever. So that is also something to be watching for. Oil has done well recently. Oil is up, if we look, roughly about 10% in that same span as, again, gold is up about 9%. That is a pretty big move for oil, but it's not too crazy for oil. Gold, though, that's showing a lot of fear. TLT on Friday actually did catch a buy, so people were pretty fearful on Friday. The NASDAQ was down 1.5%, down almost another 0.25% on Friday. Investors bought the bonds. That means yields did fall. That is good news for the markets as far as your bond yields, but it's never a good sign when investors plow money into safety assets. Like you see here, 10-year treasury yields down about 7.5 basis points on Friday, and 30-year treasury yields down about 2.5 basis points. So overall, kind of good for the economy, a little less restrictive. I know we're still at super high rates, so it doesn't make that big of a deal. But if you do see more fear out there due to this Israeli conflict, you will start to see more investors buying the bonds, and that will be great news eventually for the markets. The lower bond yields, the better. But again, if people are buying those bonds because of fear and not because the Fed is going to cut rates, or the Fed is done raising rates, or inflation has been defeated, that's what you want to see investors buying the bonds, or the reason why you want to see investors buying the bonds, not because they're fearful. Nonetheless, I do think at some point in this upcoming week, it's going to be volatile. There's going to be chop in our markets. I'm sure we're not going to fall in a straight line. I've been surprised before, and that's a possibility, obviously. The risk to reward in this market looks very poor, but Tesla has led the charge down, so I don't think the selling is going to be nearly as extreme in something like a Tesla, again, to what another stock might do. But again, I've been surprised before. Now, based on what we have seen historically with Tesla around the 30 level on the RSI, you're probably due for a bounce here in this next upcoming week. But if you're someone that is looking to hedge out your position, maybe that's not a terrible time to actually get some hedges on your position if you are concerned that Tesla could fall back to that, 160, 150, 130 level. It's not a terrible idea if it will help you sleep better at night. But really, right now is your accumulation phase. Right now is a great time to be buying Tesla. If Tesla goes lower, I mean, dude, like I said many times, I will sell a kidney to buy Tesla at 150 or 130. I'll do what I have to do to make them, to make some money. $100 is $100, no matter where it comes from. Okay, that's a little bit of a joke. Yeah. That's a joke. But nonetheless, you guys get the idea. You want to buy as many shares of Tesla as you possibly can. The lower it does go, that's just more money that you are ultimately going to make. So that's kind of my outlook here. If you look at the MACD has started to sharply turn down. It could go a lot lower, so that's not really signaling you're close to a bottom. But again, that RSI is the biggest thing you need to be watching for. You probably are going to see that move above the 200-day moving average. If you don't find support at the 200-day, that's where you get into even larger downside and really just no man's land. I mean, if you don't find support at 200 or that 200-day moving average, I mean, your next level of support could be 150. So that's a big level to be watching for. We will keep you up to date with all of this developing information you need to know with the broader markets as well as Tesla stock each and every single day. Hit that like button as well as subscribe to the channel if you guys want to come trade some of these earnings with us, or at least get notified every time I make a trade. It's never financial advice. You could lose all of your money. About 87% of options expire worthless. So there's a specific strategy that we like to employ to play the IV and not risk as much while still potentially standing to make a lot of money. If you guys want to learn more on that, if you guys want to come do that with us, potentially if you are someone that understands options, or if you're someone that's looking to learn, link down below in the description of this video. Again, that's not financial advice. I will never tell you to buy anything. Buy what you want. I'm just telling you guys what I'm doing personally. Me. Don't work for anyone else. Just me. So that is going to do it for this video. Thank you for watching. Enjoy the rest of your day and your Sunday, and I will see you in the next one.